Hello, everyone, and welcome back to Permex Petroleum's channel. We're sitting here with Mehran once again, and today we want to dive into calculating the value of an oil company. Mehran, what do you have to say about this?
I have a lot to say about that because there's so many ways, honestly, you can value a company. In oil and gas, I mean, you have analysts putting valuations on companies. They run it on various metrics. To simplify it for retail investors, I think the best way we can look at it is let's look at the assets from a 30-foot view. What acreages do they have? In which areas are their acreages situated? And at what price per acre are the offset acreage being bought and sold by the marketplace? So real estate style.
Yeah.
So let's say the Permian Basin, for instance, at its height, real estate was going, when I say real estate, I mean oil per acre in the West Texas area was going as high as $95,000 per acre.
Wow.
Okay, that's a massive amount. So if a company has, let's say, 1,000 acres, you know the value of that company based on purely on the acreage it owns. Okay, that's one way you can value a company. Another way you can look at it is it's more technical. You go into their 51-101 reports in the Canadian side, reserve reports in the US side. So you pull up their PV10 valuation. So PV10 valuation means present value discounted at 10. And these are typically done by third-party auditing engineering firms. So they're independent to the company itself, which is good. And you run the numbers that way. You look at it if, let's say, if a company's PV10 is 100 million, then you know the present value of the assets is 100 million. If they're trading on a market cap of 50 million, you know they're 50% discounted. You can go based on their PDP valuations, which is proven developed producing valuations. Again, this is okay. Let's say they have no real estate, they have no acreage, they only have ownership, meaning they only produce something and they own the production alone. So like a royalty investment. What is that value? You can value it that way. So these are ways you can actually value it.
Okay. So when it comes to these different ways, like what about like in terms of looking at their balance sheet as a whole and just revenue in and out versus debt and all that?
Yeah.
When you're comparing those with in terms of the oil per acre and stuff like that, which one would you say is more accurate, or is it all just kind of guiding you?
Well, here's the way I look at it. If you're looking at an oil and gas company to trade it immediately, so this is something you want to be in and out, go based on the balance sheet.
Okay.
But if you're looking at a company for growth, so if an oil company right now in this time, you're looking at it when oil is in $60 and you're seeing oil go back up, I wouldn't go based on balance sheet because the balance sheet is going to significantly change. If you go based on 2020 balance sheet of oil and gas companies, gosh, they're valued at nothing.
Good point. Yeah.
It's just you can't go based on that. What you can go based on is, again, what they have independently proved, verified, and go based on those numbers.
All right. So then let's talk about Permex's valuation here. Now, obviously, we have to be a little careful, but tell me your perspective on things. Obviously, 2020 was was 2020, but
It was 2020.
yeah.
But you know what? Why don't we just the same examples I just gave investors and retail markets go and run scenarios on? Why don't we run it on Permex? I don't mind. I mentioned based on acreage. So Permex has approximately 5,000 net acreage held by production in the Permian Basin. In the Permian, at its peak, the value was 95,000. That's not the going rate. Okay, the going rate is typically 5,000 to 6,000 per acre right now where we are. So you multiply that, you get $30 million. $30 million is between 25 to $30 million is our value based on the acreage we own. Divide that by our shares outstanding, you get 60 cents to 70 cents stock value. That's just taking it based on the acreage alone. Okay, let's go ahead and take it from a technical standpoint, from a reserve standpoint. We have 9 million barrels of oil in our reserve reports. Out of the 9 million, half are proved, half are not. You can never go to the bank and ask the bank to lend you as an oil company based on your probable or exploratory reserves. They will never do that. So why should we judge a company and put a value on a company based on its probable when a bank won't? So let's not do that. Look at Permex's proved reserves. It's $70 million. Market cap, 4 million.
Wow.
70 million, divide that by our shares outstanding. Well, 40 million shares outstanding. What are we getting? Around 87? Well, no, we'll get $1.75 actually for the stock. I always like to do this. When I look at a company, I'll look at its proved reserves and I say, okay, you know what? Geologists and engineers sometimes are optimists, engineers less, geologists more. Let's cut it in half. We have 70 million proved reserve, cut it in half, 35 million. $35 million market cap, or 87.5 cents stock valuation.
Okay.
One last thing I would do is run it based on its production. Our PDP value, it's 14 million within the reserve reports audited. Our value of our proven developed producing is 14 million. We're being traded at 4 million right now. At 14 million, our stock price should be around 30 cents to 35 cents.
Okay, interesting. So basically,
Simple math. This is
yeah,
when
it's
you
all
look
math.
at these, and when you have access to this information, which again, being a publicly traded company, filing all the reserve reports, filing everything, investors can go and do this because they should. Judge for yourself what a value of a company should be versus the disconnect in the market it has already.
That's a good point. Yeah, when it comes to anytime you're doing any sort of stock trading or buying and holding, whatever whatever works for you, you want to be looking somewhat into the future, not looking at exactly what is right now or the past, but rather where things are going to be going. So that makes sense.
And listen, the analysts are great. I like analysts. When you see a stock being covered by analysts, fantastic. Keep in mind, take it with a grain of salt because those analysts have shares. Those analysts are in the company as well. Those analysts are on a call with the company all the time, trying to see how they can push it up as well. Keep this in mind. As investors, do your own due diligence. Don't leave it to an analyst. An analyst is great to cross-reference with, but I wouldn't depend on an analyst to buy and sell a company. I'll do it myself.
That's a very good point. You should always be you should always do your own research and be the reason why you buy something. Never look at someone else and take their word for it. It's your money.
It is.
Well,
It is. And at the end of the day, I think people forget that the finance industry, although everything seems independent, all of it is tied together.
agreed. All right, Mehran, is there anything else you want to squeeze in or anything you can tease about the future before we go?
We're going to be launching a new IR website. The purpose of this IR website is to make it more streamlined for our investors. Given last year COVID and the way the communication between management, CEOs, and investors has been, we have now streamlined it. They can go on this website, log in. They will constantly get updates on the company, whatever is being posted, financial reports, reserve reports, audits, everything goes on it, and quickly they'll have access to it as well. We can anticipate this to be live by the end of this week.
Wonderful. Well, guys, look out for that. We'll get it to you as soon as we can. Mehran, thank you so much for coming on. If you guys have any questions, don't be afraid to shoot them to us. Have a wonderful day.
You as well. Thank you.
Thank you.